there seems to still be quite a few question marks surrounding the procedure the CBN followed with regards to the cleanup of the banking sector. Some saying that they question the bailout, the sackings, the suspensions, the roadshow, all of those because of the fact that it's all come to the fore and action being implemented there has all come to the fore before the full audit process has taken place. Your view there?
Hi, Alicia. I think that a lot of people are actually beginning to play to the gallery on this whole CBN thing. The reality is that the CBN governor reacted based on information that he had available to him. And we must also caution that, you know, the importance of the banks that were affected by this whole brouhaha, if you could call it that, to the banking sector and to the Nigerian economy at large was quite significant. Those guys represented 30% of deposit bases, 40% of loans to the real or to loans to the private sector. So the reality is that the CBN had to make a choice at a very difficult time. And I think that ultimately, in the long term, would actually I realized that the decisions taken at that time actually saved the banking sector from imminent collapse.
Well, Femi, of course, while I've highlighted the one side of the argument, the other side is clear, and you've highlighted that some would say better to uncover and be transparent about issues as soon as possible. In this context, though, with all this debate still waging around the banking sector, we are seeing some value hunters come to the fore, trying to take advantage of low valuations here. Where are you looking in the current context?
Well, look, I think from our point of view, the reality is that there's a report that's come out of South Africa from JP Morgan, for example, that has tried to give some form of analysis on the way the banks are and also stress the balance sheets. The reality is that the global financial crisis did impact on the real sector in Nigeria, and the real sector in Nigeria did impact on the banks. It's just very simple. And certain banks were more exposed than others. The argument against the CBN's position has always been that you should have given the banks time to redress whatever issues that they had in their books. You know, but the question you need to ask yourself is that the information available to the central bank, which isn't available to all of us, did it suggest that delay was dangerous? Maybe that's what happened. There's a lot of speculation going out in the market, and I think I'm actually surprised that the CBN governor has said as much as he has, because the reality for me is that he's a man who should be seen and rarely heard. It's important that we continue to support the banking sector in Nigeria. And you know, in the last 9 months, I've always insisted that we needed to support the Nigerian banking sector because that is actually the heartbeat of the Nigerian economy. And once lending freezes, as we've seen in the US, the only person who can solve the problem is the government. And I don't think Nigerian government actually has the finances to carry the rest of the economy at this point in time. So whatever happens, at the end of the day, it's important that the Nigerian banking sector is given whatever support is necessary within the law to continue to operate within the context of what we have today.
Well, outside of the banking arena, we've seen the cement players getting a lot of attention. We saw the cement company of northern Nigeria declaring a dividend of 80 kobo, and the market seeming to take quite positively to that news. What's your view on that company within the cement sector right now, where we've got all these players really performing well?
Well, I think the performance of the real sector of the economy certainly vindicating some of the positions that we've taken in the last 12 months. We believe that a lot of focus from 2005 to 2008 was driven more towards the banking sector. And I think from a portfolio management point of view, it was actually funny because the banking sector needed the real sector to continue to grow at the sort of numbers that we were seeing. And if the real sector wasn't growing, then we were going to get to a point where the banks couldn't justify some of the numbers that they had.